Hello Wolfpack, welcome back to another Bitcoin video. Today we're going to be diving into the shorter term and some of the stuff that's happening in regards to that. We've also got a weekly candle close in 20 hours exactly, and we also need to take a brief look into our buying plan and when that's going to play out before. We're also going to look into, I know there's a lot of things to cover today. We're going to get through it very quickly though. The last thing we'll look into as well is the macro reversal point. I think we'll start with that. Okay, because I've discussed extensively, and mainly because it's the most important thing, I've discussed extensively this yellow downtrending line being the macro reversal point. That is not actually true. That's not what I've said. It's not the macro reversal point. It's simply a breakout point that will likely lead to a macro reversal. The actual macro reversal point itself is 28.6k. All right, and that's something that I've been saying for a long period of time. I don't mention it very often anymore, simply because of the fact we're very far away from 28.6k. But that's the macro reversal point. Okay, so my buying plan is simply this: 33% at 17.5, 33% at 11 to 13, and then 33% at the breakout point. And obviously, if we don't reach 11 to 13, it's just 33 at 17, and then 67 at the breakout of the yellow line. But the breakout of the yellow line will not be the macro reversal. Will not fully confirm that the bottom is in. Now, it will likely confirm. A move that would confirm the bottom is in, because I think if we break that yellow line, we're unlikely to test lows again. I think if we break that yellow line, we will be trending upwards and we will eventually reach the macro reversal point. But that line is not the macro reversal point itself. That's a very, very, very important distinction to make, right? Just like in 2018, let's remove everything and just get a clear chart here. Just like in 2018, right, we had a horizontal resistance support line that was consolidated on top of. When we lost that, we reached the low, we came back up, we broke above it, and that confirmed the bottom. By that point, by that break above there in May 2019, the bottom was confirmed because we'd broken above the previous resistance that we had, support that we had before the capitulation. Now, the COVID drop doesn't actually count. It's a black swan event, doesn't mean anything. Moving back to 2014, again, horizontal support line, major capitulation. We saw the bottom once we broke above the horizontal support. That was, the support level before the capitulation. We confirmed the bottom. And it's the same thing in 2022, okay? So we had 28.6k, major horizontal support line. We saw a capitulation below it. And once we break above 28.6k, that will finally 100% confirm the end of the bear market and the end of the low. When we break above 28.6k, that is the confirmation that the bottom is in. Now, I wouldn't be waiting that far upwards to buy Bitcoin because that's a 50% pump away, and that's why I'm buying at the yellow line, right? When we break that yellow line, I think there would be enough evidence to indicate that we would be testing that macro reversal point as we've done in previous bear markets, right? So no, you're completely correct. The people who say this are completely correct. Breaking this yellow line does not confirm the bottom, right? And I think I need to be more careful with the way I word that. I've never thought that, but I have simplified it to that point in the past. I just want to make it very clear. It does not confirm the bottom. It does a lot in confirming a move that would potentially confirm the bottom, and that's the correct terminology to use there. Now, as for the compression, as for when the break above this yellow downtrending line could be, we've got a lot of different potential points here, but I think generally speaking, the audience of Fools Crypto and myself included think that the bottom will either be at 17.5k, 13.8k, or 11.5k. Those are kind of the three levels we're looking at. I don't think we'll go below that, but even in the case that we do, we'll put a lower target. We'll just say, for example, 9k. We'll just put that in there just in case, right? For the people who are more bearish. We'll extend that yellow line downwards and we'll realize that, hey, even in the scenario that we go all the way down to 9k, we have to make a move either up or downwards by, the point that these two lines meet. The point at 9k and this yellow downtrending breakout line meets. Okay, we have to make a move either up or down. And I think it's very unlikely we go below 9k. Okay, I even think it's unlikely we go below 11k. But I think people who are even more bearish than me would understand it's very unlikely we drop below 9k. I've only got a few people in the entire Wolves Crypto community that think we'll go lower than 9k. But even in that scenario, right, where we go to 9k, the latest we can possibly bottom is December 12th. In the scenario we bottom out at 11.5k, the latest we can possibly bottom is the 26th of November. In the scenario we go down to 13.8k for a bottom, the latest we could possibly bottom is the 10th of November. And in a scenario where we double bottom at 17.5k, the latest we could possibly bottom is the 16th of October. So you can see that, even in a 9k scenario here on Bitcoin, we're going to be bottoming out before December 12th. And I want to be very clear again, it's hard to keep this terminology consistent. It doesn't mean we're bottoming out. It means we're breaking above this macro yellow line, which would do a lot to confirm the bottom, but it doesn't actually confirm it. Again, 28.6k is needed, but I think it's, if we do that in Q4, which is what is expected here, because these lines will meet in Q4, that is as per the 4-year cycle theory. And I think bottoming out in Q4, breaking above a 12-month long descending line, as per the 4-year cycle theory, is a lot of evidence for a bottom in itself, right? It's just not completely confirmed at that point. But that's very interesting, right? So even in one of the most bearish scenarios that you could possibly imagine, a 9k Bitcoin, you're going to be seeing a major upswing before the 12th of December, which is in less than 3 months, right? 2.5 months, which is not a long period of time. I mean, and considering people are overly, massively bearish. I mean, look, if we bottom out at 17.5k, which would be what a typical bear market would look like, because what have we done in bear markets historically? Let's take a look, right? We see bear markets, we drop down. As I said before, we have that horizontal support line in 2014. We see one sharp capitulation below it. We range and we bottom out, right? We range for it in a few months and we bottom out and then we pump, okay? One horizontal support line, 2018, one major capitulation below, we range for a few months and then we bottom out, okay? Same thing in 2022, sorry. One major horizontal support line, capitulation below it, we range for a few months and then we bottom out. If the bear markets have been consistent and if the bear markets remain consistent and if we follow the trends we've had in the previous bear markets, which is by no means guaranteed, but it is worth considering, we should realistically be bottoming out at 17.5k by all measures, okay? And people say to me all the time, well, they say to me, okay, Wolf, but what about the 80% drop we usually see in a bear market? Okay, how many times have we seen that? 2 times. 80% drop, 2 times. 2 times is not a trend. Okay, that's not a trend. A trend is something more consistent with what I just explained. Horizontal support, one capitulation, months long of consolidation, pump. Horizontal support, one capitulation, months long of consolidation, pump. We've seen that 3 times. So the 80% drop that we've seen twice, it's not a trend, it's just a random coincidence most likely, right? This horizontal support and then one capitulation and then bottom, that's a trend, that's happened 3 times. Okay, yeah, it's not, the 3rd time isn't confirmed, but it seems very consistent with what's gone on in the past. I mean, we've seen things like, for example, I'm not going to bring it up, but like example, the pi cycle bottom and top indicator trigger a bottom, right? At the same period of time that it was triggered in 2015 and 2018 after the same exact horizontal support, one capitulation, and then bottom pattern, okay? So it's very important that people understand, Bitcoin, if it was acting as it did in previous bear markets, would bottom here at 17.5k. Does that mean it will? No, that's why I've got lower targets, but it does make it a considerable probability of it happening, and if it does happen, if we do bottom 17.5k, guess what? That's going to be happening within like the next 3 weeks. So it's getting very close. It's getting very tight for Bitcoin. I know that, generally speaking, the market's been extremely boring. In fact, it's been excruciatingly boring for some people. If you're not a day trader, and I personally day trade, so I've got stuff to remain occupied with, but I understand how people are extremely bored. I mean, it's going sideways, generally speaking, for 3 months now. So this is what the market does before it bottoms out. That's typical as well. I'm not saying the bottom's going to be at 17.5k. I'm merely saying that to act like it's not a chance at all and just point at the macro, and that's your only explanation as to why it won't. It's like, well, you're kind of ignoring TA, and people who ignore TA generally lose. Yeah, so I agree with you. The macro is not a good situation. Nothing's going well in the macro, that's for sure. We are seeing a light at the end of a tunnel. But as of right now, you would expect it to get slightly worse before it gets better. But what I have seen here, and this is something regarding the macro, is, I posted this on my YouTube community page yesterday. I think people are overly bearish on the macro as well. Yes, the macro is still bad. Yes, we still need to see significant rate hikes. But, reading this post here, the probability for a 50 basis point hike in the next hike, for example, this is the next hike, it's raised up from 13%. So the last hike, it was 13% for a 50 basis point hike. Now it's 27%. And the probability for a 100 basis point hike is non-existent. Okay. And then if we move into the rate hike after that in December, we can see that the probability for a 50 basis point hike rises to 70%. And the probability for a 75 basis point hike lowers down to 3.2%, 3.7%. So, whether or not we see a 75 basis point next or not is not the question. The question is what's going to happen towards the end of the year. And as you can see here, in December, we've got a 70% chance of seeing a 50 basis point hike and a 25% chance of seeing a 25 basis point hike, right? So the fact of the matter is, yeah, like rate hikes are still happening, they're still going up, but the magnitude is dropping off significantly. And the probability of them consistently staying at 75 basis point are dropping off significantly. What does that indicate? It indicates the Fed will be winding down their response to inflation, which is great for the markets, right? And a lot of people really try to debate me on that, but I don't understand what if there is to debate. If the Fed's going to raise by 75 basis points, right, and they're consistently increasing the magnitude of rate hikes per hike, that is indicative of the fact that their response is getting more aggressive, and the restrictions on the markets and people in general and consumers is getting more restrictive. Okay, but if they're still fighting it, but they're fighting it less and less and less, it's indicative of the fact that the threat is dissipating. And obviously it's a natural progression. Okay, if you're on for example, on a mountain, and you're going up and up and up and up and up, it's going to get harder and harder and harder. But if you reach the top and it starts to curve out, yeah, you're still going upwards, but it's curving out. You're getting to the top, and eventually it's going to come back down. It's just like that, So yeah, it's not bullish yet, but I think it's the main point that people need to remember. The markets don't predict the present; they reflect the future. So if there is an indication that the Fed is easing off on rate hikes, it means that the inflationary pressures are getting lower and lower, and that's why the Fed would do that. They wouldn't do it if it wasn't getting lower and lower. They've made their stance very clear. So, and then we've got, 3 out of 4 Australian major banks expect interest rates to top out in November this year, which is Q4, as per the 4-year cycle theory. The US Federal Reserve is going to be raising 50 basis points in December or less, which is Q4, as per the 4-year cycle theory. And the UK has seen a 50 basis point hike instead of a 75 basis point hike, which indicates a lesser response to inflation. So, yeah, we could see a black swan event. Yeah, the energy crisis is insane. Yeah, Russia's threatening nuclear war. Yes, China's threatening to invade Taiwan. But all of these things are so unpredictable that we can't take them into account. It's not something we can take into account. We see this stuff time and time again. How are we meant to? How are we meant to take it into account? If you're waiting for China to invade Taiwan and that's why you're not buying Bitcoin, it's like, well, are you a geopolitical expert? No, you're not. You're just relying on what the media is telling you about the situation. So to act like you're fully educated and you know exactly when they're going to invade and how it's not a good idea to buy Bitcoin, well, guess what? Most of the time when things like this happen, nothing actually happens. Look at North Korea. How long have they been threatening nuclear warfare? Like 12 years. There's been people who have probably stayed out of the market for that entire time because of that. You can't let exterior events that are unconfirmed control the way you invest in financial markets. It's simply not how, you should do it. And guess what? If there was a situation in which China was to invade Taiwan, it's likely to not be a surprise event. Again, this is a guess, all right? I'm in no means qualified to make these claims, but it's likely to be an event in which there's a build-up over time. And if there's a build-up, guess what? It means it's priced into the market. So unless it's a black swan surprise event, it's not going to lead to this dramatic drop that out of nowhere. If it's something people are expecting, that gets priced in. So it's not something to be overly concerned about, in my opinion. But yeah, 20 hours into the weekly close, and of course, this would be the lowest weekly close. If we closed right here, this will be, in fact, if we close below 19,300, it would be the lowest weekly close we've had in the entire bear market. So we've formed the double bottom already from a weekly candle perspective. From an actual close perspective, the double bottom is formed. Now, we should realistically come down and wick and touch that at the very least. But I just want to make that clear. The double bottom's technically already formed from a weekly close perspective. But we're not actually, I don't think we're ready to bottom yet properly. To be honest with you, I think we still need to lurk around this area and possibly go down a little bit further. And if we do come down to this 17.5k level, be cautious, right? Because we could see a scam wick. We could see like a 10% scam wick. We see it all the time. So don't think that level's been lost or anything. Just remain vigilant, remain calm if that does occur, and it could happen very shortly. And that's leading into the shorter term analysis. It's like, well, we've got a consolidation pattern here on the hourly chart. We've got this longer term descending broadening wedge formation, and then within that formation we have a triangle, symmetrical triangle formation. And so this triangle formation is actually due for a breakout, possibly within the next within the next 12 hours, to be honest. So we'll break this triangle within the next 12 hours. It will lead to either a touch of the top of the wedge or a touch of the bottom of the wedge. And from that point, we can either break downwards or upwards. And I can tell you right now, if you want to be watching the short term, you should be watching this entire structure I have here. The triangle, the level at 19.5K, which is the 2017 all-time high, and the level at 17.6K, which is the bear market bottom. This is the structure you should be watching. This chart, this short-term chart, will tell you everything you need to know about the price action for Bitcoin, right? So that's very important as well. But I think I'll leave it there. I think I covered quite a bit in this video, guys, and we'll jump back into it tomorrow. Go to my YouTube channel homepage and click on the join button. You will see a tab that comes up which shows you all the information of the V.I.P membership with the Wolves of Crypto YouTube channel. What you get in return for 40 AUD a month, which works out to be around 30 USD a month, is 4 exclusive trading setups per week, which have been extremely profitable in the past. Prioritized reply to comments on my end. A trading psychology lecture, which is extremely useful, and some people have actually said that's the most useful video I've ever made. It goes into a deep dive into the actual mechanics, psychologically speaking, around trading. And then also an exclusive Telegram group access link, which has over 200 members currently. And so you can go in there and discuss the market 24/7 at any time of day. We've got members from all around the world in there. So go ahead and sign up to to VIP membership using that join button there. Moving forward, we're going to talk about BitGet, and this is the exchange we use on the VIP membership. So this is all the VIP members use this exchange. Now, I actually was using this exchange before I had a partnership with them. I was the one who reached out to this exchange asking for a partnership because I genuinely think it is such an improvement on the major exchanges like Binance and Coinbase. Why do I think that? Well, first and foremost, it's got 0 fees on spot pairs, which is saving you a bunch of money. On top of that, it's got 5 times lower fees than Binance on futures trading. So immediately it establishes itself as an extremely cheap and efficient exchange to use for everyday trading and even investing, honestly, if you're investing with considerable chunks of money. On top of all of this, it holds true to the values of cryptocurrency. And it does that by being non-KYC on your end optionally, which means that essentially, all these other exchanges here, heavily centralized. They require you to put your identity in. They require you to kind of, trespass and encroach on the values of cryptocurrency. BitGet doesn't ask you to do that. You can do it if you want to for tax reasons, but it doesn't ask you to do it. It's not mandatory. You can use this exchange globally, and you don't even need to link your identity to it if you don't want to. Now, that doesn't take away from the safety of this exchange, because this exchange actually has a protection fund, and we'll click on the link here. And essentially, they have deposited 6,000 Bitcoin and 80 million USDT onto this exchange to make sure that in the occurrence that someone loses their money on the exchange via a hack or whatever like that, you can make a request here and you can get that money refunded to you, provided it was not the fault of the exchange. So that's very interesting as well. Not many exchanges have anything like that. So go ahead and sign up to BitGet using my referral link in the description below, and you will additionally gain access to a reward center with over 4,000 USD in rewards. And on top of that, adding to the list here, you also get 10 USD dropped into your account straight away after you make your first trade using my referral link exclusively. So go ahead and do that. You're supporting the channel in doing that as well. It's completely free and it takes 5 minutes. Thanks, guys. And then lastly, we've got the Crypto Academy. Now, this is for people who want to learn how to trade. So if you're interested in learning how to trade, I recommend this course. This is a course developed by myself and Megawell Crypto. If we scroll down at the bottom, you can see Megawell Crypto, big analyst in the space. We work very closely side by side, share a lot of the same ideas. We also challenge each other on some ideas. And so we've got 2 perspectives together in order to form this one course. You can go to the website and read the bio. Essentially, it's 10 units. It's very comprehensive. It's very extensive. And it's going to teach you everything you need to know about trading in a cryptocurrency market. And to be honest, any financial market. It's going to teach you how to learn those charts. It's going to teach you the right mindset. It's going to teach you how to find the trades, etc. You can join us here. Go to the website, scroll down at the bottom, and chuck us an email at cryptoacademycourses@gmail.com, and we'll get back to you with the rest of the information. Thanks for watching, guys. Cheers.